In this video, we'll break down 3 powerful break and retest setups you need to master. First, we'll cover the classic break and retest in an uptrend, where price breaks above resistance, pulls back, and offers a clean entry to ride the trend higher. Next, we'll show you a trendline break setup, how to spot weakening support, time the retest, and position yourself for the move once the trendline gives way. And finally, we'll look at a break and retest in a downtrend, where price cracks below key support, comes back up to retest it as resistance, and then continues lower. We'll also give you a few key rules to follow and highlight the most common mistakes traders make when using this setup, so you know exactly what to do and what to avoid. A breakout setup is a pattern where price breaks through a key level, signaling a potential continuation or reversal of trend. In an uptrend, the breakout occurs when price breaks above a resistance level, confirming bullish continuation. In a trendline breakout, the trendline acts as a dynamic support. When price breaks below this trendline, it may signal a weakening trend or possible reversal. In a downtrend, the breakout happens when price breaks below a support level, and that level often becomes new resistance, confirming bearish continuation. This setup helps traders recognize critical shifts in market structure and position for the next move. Look at this type of break and retest setup. You'll see price respecting key levels over and over again before finally breaking through. Notice how it reacts around these zones, giving you clear clues about where buyers and sellers are stepping in. This is a textbook example of how a clean break, followed by a retest, can set up a high probability trade. First, start by identifying the horizontal zones where price reacted multiple times. Then, wait for a breakout of the zone, either key resistance or support. That breakout is your first sign. But here's what's important. If price breaks above resistance, your higher time frame must already be in a bullish trend. Same goes for the downside. If support breaks, your higher time frame should be bearish. Always align with the bigger picture. After the breakout, price rises into the broken resistance zone, which now acts as support. This is the classic retest setup. The level has flipped and buyers are stepping in again. That's your confirmation. This setup often shows on the 15-minute or 5-minute chart. If you identify it, use these 4 rules and steps for confirmation. Confirm the bullish bias by making sure the higher time frame is in an uptrend, the 4 and 1 hour time frame. Identify the previous resistance level that has now turned into support. After the breakout, wait for price to test this new support level. Look for a bullish engulfing candle as confirmation to enter the trade. This creates a clean, long opportunity with tight risk, placed just below the retest zone. You had well-defined, respected levels on the chart. The initial breakout confirmed that buyers had taken control, and the retest offered the safest entry, with confirmation, not guesswork. Let price prove itself before you act. In this example, we have a trendline break and retest pattern unfolding clearly on the chart. Let's walk through each step to see exactly how this setup developed. Step 1. Identify the trendline support. Here we can see a clear ascending trendline connecting multiple higher lows. Each time price came down to this level, buyers stepped in to defend it, creating a series of bounces. This repeated reaction confirmed the trendline as strong dynamic support. Step 2. The break of the trendline. After holding as support multiple times, the trendline finally gives way. Notice how price closes decisively below the line with strong bearish candles. This breakdown is the first clear signal that buyers are losing control and sellers are stepping in to push the market lower. Step 3. Retest of the broken trendline. Following the initial break, price retraces back up to test the underside of the broken trendline. This is a classic retest setup. What was once support now acts as fresh resistance, and the retest provides confirmation that the level has flipped. Step 4. Continuation move down. After rejecting the retest, sellers take over again, driving price sharply lower. This continuation move confirms the shift in market structure and gives traders an opportunity to enter short positions, targeting the next support zones below. Let's now look at break and retest in a downtrend. First, mark the key levels on the chart. These horizontal zones acted as strong support earlier. Once price broke below, they turned into resistance zones. Notice the first key level here and the second level further down. After the initial breakdown, price pulls back up into the zone. But pay attention to how it approaches. The bullish candles get smaller, and you start to see wicks rejecting the area. This shows buying momentum is slowing down. A common mistake here is jumping in too soon. Many traders enter right when price first touches the level, expecting an immediate drop. But usually, the market likes to probe deeper, grab liquidity, and only then show the real rejection. Another mistake is thinking the zone failed just because it gets pierced slightly. Here comes the confirmation. Notice the strong bearish engulfing candle right after the wick rejections. This is the signal that sellers are stepping back in and the level is respected. Same pattern on the second retest. Small bullish candles are followed by a decisive bearish push. After each rejection, price sells off aggressively, confirming the setup. Both entries would have resulted in clean, profitable short trades. This pattern works because old support becomes new resistance. Traders who bought here earlier get trapped when price breaks lower. When price returns to the zone, they exit in panic, adding to the selling pressure. New sellers also enter, driving the continuation of the downtrend. This image actually shows two trading opportunities using the break and retest concept. After price broke the upper support zone, it pulled back for a retest. The rejection with strong bearish candles created the first short setup. Later, price broke below the next support zone. Once again, it retraced back up, showed rejection, and continued the downtrend, giving you a second clean entry. This is a perfect example of how break and retest can repeat multiple times in a trending market. Each retest becomes a new chance to enter in the direction of the trend. Notice that this chart didn't give you just one trade. It actually offered two clear break and retest opportunities back to back. This is why understanding this pattern is essential. It keeps showing up again and again whenever the market is trending. Trading is a game of patience, discipline, and consistency. Master the setup, trust the process, and the results will follow. If you found value in this breakdown, make sure to hit the like button, subscribe, and tap the notification bell so you never miss a powerful setup like this again. Keep learning, stay sharp, and trade smart. See you in the next one.